gold just touched $4,640. Then more than $40 disappeared almost immediately. And before gold could even stay below $4,600, buyers came back. That single move tells you exactly what kind of week we're entering. Gold has climbed nearly $300 from around $4,325. But over the next few days, this rally faces four completely different tests: inflation, Nvidia, a political fight over the Federal Reserve, and Jackson Hole. And here's why this week is different. All four ultimately lead back to the same two markets: US Treasuries and the dollar. That means by Friday, we may know whether gold above $4,600 is simply the final stage of an extraordinary rally, or whether the market is beginning to price gold on an entirely different basis. Because something unusual is already happening. Gold is rising even while long-term US yields remain extremely high. And that may be the biggest clue of all. Gold is becoming more than a rate trade. Normally, the relationship is straightforward. Treasury yields rise, gold struggles. Treasury yields fall, gold gets relief. Gold doesn't pay interest, so higher bond yields increase the opportunity cost of holding it. But that simple relationship is becoming less reliable. Long-term US borrowing costs remain elevated, and gold has still pushed above $4,600. So investors may no longer be trading only the next Fed decision. They're starting to trade the credibility and cost of the entire system. US federal debt has moved beyond $40 trillion. Long-term borrowing costs remain historically high. And last week, the Treasury doubled the size of some long-dated debt buybacks to $4 billion per operation. That isn't enough by itself to solve America's debt problem, but it sends a message. Washington is becoming increasingly sensitive. And that changes the gold story. Because if investors become concerned not only about inflation, but also deficits and debt servicing costs, gold isn't simply competing with bonds anymore. It starts becoming insurance against the system behind those bonds. That may help explain why recent pullbacks have been so aggressively bought. And now that theory is about to be tested 4 times. Test 1. PCE. Wednesday morning is the first major test. At 8:30 a.m. Eastern Time, the U.S. releases July personal income and outlays, including the PCE inflation data. At exactly the same time, we also get the second estimate of second quarter GDP. The previous core PCE reading was still running at 3.3%. That's well above the Fed's 2% inflation objective. So Wednesday morning matters. A softer inflation reading could take some pressure off Treasury yields. And if gold is already holding around $4,600 with yields elevated, lower yields could provide another tailwind. But a hotter PCE number creates the opposite test. The market could price a greater risk of tighter Fed policy. Treasury yields could move higher. And gold would have to prove that this new demand can survive another rate shock. But don't make the mistake of watching only the PCE number. Watch the reaction. If inflation surprises higher, yields rise, and gold still keeps attracting buyers around $4,600, that's information. It would suggest the market is trading something larger than inflation alone. And only a few hours later, we get test number 2. Test 2. Nvidia. Wednesday is effectively a double event day. Inflation before Wall Street opens, then Nvidia. After the close, Nvidia says its results will be released at approximately 1:20 p.m. Pacific Time, followed by its earnings call at 2 p.m. So why should gold traders care about a chip company? Because Nvidia has become a gauge of the global AI risk trade. If Nvidia delivers another powerful result and investors pile back into tech, capital could rotate towards risk assets. But if the company disappoints, the reaction could spread. And suddenly gold faces a completely different test. Not inflation, fear. PCE tells us how the market wants to price inflation. Nvidia tells us how aggressively investors still want to own risk. Then comes something much less conventional. Test 3. The Fed's independence. President Trump has renewed efforts to remove Federal Reserve Governor Lisa Cook. The White House has cited mortgage fraud allegations. Importantly, the Supreme Court previously blocked an earlier attempt to remove her while recognizing due process protections. But for gold, This isn't really a Lisa Cook story. It's a Federal Reserve independence story. If investors believe political pressure could influence monetary policy, then the market has another risk to price: institutional risk. If that confidence receives a political discount, gold becomes one of the most obvious places investors can express it. This is where the current rally becomes interesting, because fiscal concerns and monetary policy credibility are beginning to overlap. And that brings us to the final test. Test for Jackson Hole. The symposium runs from August 27th to 29th. Markets will be watching Fed Chair Kevin Warsh particularly closely. This will be his first Jackson Hole appearance as Fed Chair, at a time when markets struggle to understand his framework. Warsh has reduced reliance on traditional forward guidance. Long-term yields have become increasingly volatile. The market will be asking, how does this Fed deal with persistent inflation while borrowing costs are already under pressure? 4 tests. 1 market question: PCE, Nvidia, the Cook dispute, and Jackson Hole. They look unrelated. They're not. Every one of them can change demand for treasuries, the dollar, and the price investors pay for gold. WHY $4,600 matters. Gold reached $4,640 this morning, dropped $40, and buyers quickly returned. The real question is whether capital continues returning once it gets there. If buyers keep doing that, the meaning of $4,600 changes. It stops being simply a number. It becomes a price the market is willing to accept, and then $4,700 becomes the next question, the real test. What if gold is also becoming a trade on US fiscal and institutional risk? After PCE, Nvidia, and Jackson Hole, one question matters. Does money still want to own gold above $4,600? This is Grand Markets. Subscribe for more analysis on gold and the macro forces driving global markets.